Want to grow your money but don't know where to start? The smartest investments don't require a finance degree, just the right knowledge, timing, and a little courage. Hey, Top 10 Facts fam! Welcome back to the channel that helps you stack your knowledge and your cash. Today we're diving into the top 10 smartest investments for beginners. Whether you've got $100 or $10,000, these ideas will help you grow wealth the smart way. Like, subscribe, and let's unlock your financial future. 1. High-yield savings accounts. A high-yield savings account is the safest and simplest way to start investing, especially if you're just getting your financial footing. Unlike traditional savings accounts that offer a measly 0.01% interest rate, high-yield savings accounts can offer between 3% and 5%, depending on the bank and broader economic environment. That means if you deposit $5,000, you could earn up to $250 annually just in interest without touching the stock market. These accounts are also fully liquid, meaning you can access your money anytime without penalties. And they're FDIC insured up to $250,000, which guarantees your funds are protected even if the bank fails. Many institutions like Ali Bank, Discover, Capital One 360, and Marcus by Goldman Sachs offer sleek mobile apps, automatic transfer options, and helpful dashboards for tracking your savings. This is the ideal place to store your emergency fund, short-term savings, or cash you want to keep growing safely while planning your next financial move. Best part? It teaches you the value of interest, savings discipline, and goal tracking from day one. 2. Index funds. Index funds are one of the most powerful, set-it-and-forget-it investment tools available to beginners. These funds are designed to mirror the performance of a specific market index, like the S&P 500, which includes 500 of the largest companies in the US. When you invest in an index fund, you're essentially buying a slice of each of those companies. Instead of gambling on which stock might pop, you're spreading your money across giants like Apple, Microsoft, and Tesla, all in one basket. Historically, the S&P 500 has delivered average annual returns of 8% to 10% over the long haul, which beats most actively managed funds. That's enough to turn $10,000 into over $100,000 in a few decades through compounding. Index funds are low-fee, tax-efficient, and automatically diversified. Top choices include Vanguard's VFIAX, Fidelity's FXAIX, and Schwab's SWPPX. They're especially great for retirement accounts like Roth IRAs or 401ks. If you're after a low-maintenance proven method to grow wealth, this is it. 3. Real estate investment trusts. REITs. Offer a beginner-friendly way to dive into the world of real estate without buying, maintaining, or managing properties. These trusts pool money from investors to buy and manage real estate assets like apartment buildings. They're traded like stocks and often pay consistent dividends. By law, REITs must pay out at least 90% of their taxable income to shareholders, which makes them a favorite for passive income seekers. REITs specialize in certain sectors like healthcare, Welltower, logistics, Prologis, or retail, Simon Property Group. Others, like the Vanguard Real Estate ETF, VNQ, offer broad diversification. Investing in REITs is a great way to benefit from property appreciation and rental income without a down payment, mortgage, or landlord responsibilities. If you want real estate exposure without buying a building, REITs are your shortcut. 4. Investing in yourself. The smartest investment for long-term success is yourself. Whether it's improving your skills, building your confidence, or enhancing your health, investing in personal development yields returns that ripple through every part of life. Learning high-value skills like software development, digital marketing, graphic design, or public speaking can drastically boost your earning potential. A single course or boot camp could help you land a better-paying job, start a freelance business, or even launch your own company. Reading books on mindset, finance, or communication can rewire your thinking. Investing in fitness and nutrition boosts your energy and productivity. Even therapy or coaching can lead to clarity and performance gains. Your personal growth compounds, just like money. 5. Employer-sponsored retirement accounts. 401k, 403b. If your job offers a 401k or 403b retirement plan, use it. These accounts allow you to invest a portion of your paycheck before taxes are taken out, reducing your taxable income today. Even better, many employers match a percentage of your contributions. That's literally free money for your future. Let's say you make $50,000 and contribute 5% annually, $2,500. If your employer matches 100%, that's another $2,500 added. Over time, that money grows tax deferred, meaning you won't pay taxes until you withdraw it in retirement. With consistent contributions and average market returns, this can turn into hundreds of thousands, if not millions, by the time you retire. Most plans offer target date funds that automatically adjust risk as you age, which is perfect for hands-off investors. Don't leave this benefit on the table. Maximize your match. 6. Micro-investing apps. Micro-investing apps like Acorns, Stash, and Robinhood have opened the door for everyday people to start investing with almost no money. With as little as $1, you can buy fractional shares of companies like Apple, Google, or Netflix. It's simple, intuitive, and a great way to get started. Apps like Acorns round up your purchases and invest the change. Stash lets you pick themed portfolios based on your interests and goals. Robinhood allows commission-free trading with real-time stock prices. Many also offer learning modules to help you understand investing basics. These tools remove barriers, helping you build confidence, learn the market, and form good habits, like consistent contributions and goal-based investing. It's financial literacy in your pocket. 7. Roth IRA. A Roth IRA is a retirement account where you pay taxes now and withdraw tax-free later. Perfect if you expect to be in a higher tax bracket when you retire. You can contribute up to $6,500 a year as of 2024, and your investments grow tax-free forever. Unlike a 401k, you can invest your Roth IRA into anything: stocks, bonds, index funds, REITs, ETFs, and more. You can even withdraw your contributions, not earnings, anytime, penalty-free, which adds flexibility. For example, investing $6,000 annually from age 25 to 35, then stopping, can still yield more in retirement than starting at 35 and contributing until 65. Time and compounding are your superpowers. Fidelity, Vanguard, and Schwab are top platforms to open a Roth IRA. 8. Starting a side hustle. A side hustle is one of the most dynamic investments because you're investing both money and effort into a potential income stream. Whether it's freelancing, tutoring, creating digital products, affiliate marketing, or building a YouTube channel, you're developing assets that can pay you for years. Side hustles give you creative freedom, new skills, and income diversification. You can start small, like designing logos on Fiverr or selling print-on-demand merch, and scale up. Many people eventually turn side hustles into full-time businesses. It's not just money you gain, it's ownership, time freedom, and pride. Plus, side hustle earnings can be reinvested in other smart assets, compounding your wealth faster. 9. ETFs, exchange-traded funds. ETFs are like index funds but more flexible. They trade on stock exchanges like individual stocks and can be bought or sold throughout the day. Top ETFs include SPY S&P 500, QQQ Nasdaq 100, and VTI Total US Market. They offer low fees, diversification, and ease of use. You can invest in ETFs with any brokerage account, and some apps even let you schedule automatic purchases, making it great for dollar-cost averaging. Want international exposure? Look into VXUS or VEU. Prefer dividends? Try VYM or SCHD. With ETFs, you can tailor your portfolio to your interests and risk tolerance. 10. Dollar cost averaging. Dollar cost averaging, DCA, is a simple yet effective strategy where you invest a fixed amount on a regular schedule, regardless of market conditions. Instead of guessing the perfect time to invest, you build your portfolio consistently. If you invest $100 a month, you'll buy more shares when prices are low and fewer when prices are high. Over time, this averages your purchase price and reduces emotional decision-making. DCA helps you stay invested, build discipline, and harness the power of compounding. Combine this with index funds or ETFs, and you've got an automatic investing machine that can grow wealth over time without stress or market timing. There you have it, 10 smart investments for beginners that can set you on the path to financial freedom. No matter where you're starting from, the key is to start. Which one are you most excited to try first? Drop it in the comments. We'd love to hear your journey. Don't forget to like this video, subscribe to the Top 10 Facts Club, and hit that bell so you never miss a money move that could change your life. Until next time, invest smart, dream big, and let your money work as hard as you do.